Hello there, this is Rob Reinhold with Maverick Currencies. Nice to see you here. And today we're going to talk about how to trade the New Zealand dollar, or the Kiwi as it's called. So let's just kind of jump in real quick and cover New Zealand itself as a country. Now, this is by far the smallest country of a major currency that we trade. And New Zealand is actually the 50th largest economy in the world and the 83rd largest by population. Now, typically, we wouldn't even look at a currency like this because it's so small, spreads are so wide. But you know what? New Zealand is a very highly traded currency, and it actually has a very large GDP for its population. And the economy is based on agriculture. A big part of the economy is based on agriculture and exports to Asia. However, the largest part of their economy is actually New Zealanders themselves, just doing business amongst each other. Their largest imports are automobiles, petroleum, and computer equipment. So again, they have to import these things. They don't have a real robust sector that produces these kind of products. Their main exporters, like we said, it's agricultural, milk and dairy, sheep, and beef. So again, a huge export economy as far as agriculture goes. And if we take a look and see where does this agriculture go, we can see that this is pretty much all agriculture, and most of it is going to go to Asia and the countries closest to it. So if we take a look at New Zealand's economy, again, it's a very small country, only 5 million people. But take a look at the GDP. So we take out imports and exports. You can see that the majority of the GDP of New Zealand is actually created by New Zealanders themselves. And they sport one of the lowest debt to GDP ratios at 43% as of 2021. Let's cover some interesting currency facts about the New Zealand dollar. Despite being the 50th largest economy and 83rd largest country in the world, it actually ranks as the 10th most traded currency in the world. That's amazing. And it actually accounts for 2.1% of all global currency daily volume. So this little small country out in the middle of the ocean actually has a very big outsized effect on foreign currencies. And it's very interesting that such a small country could have such a big impact on global trading. Now, the New Zealand dollar is commonly called the Kiwi. Now, we call it the Kiwi, and this goes back to when they started their own currency. They didn't want it to be called the dollar. They wanted it to be different than the dollar and the pound. And so they started to call it things like the Kiwi, the Fern, and even the Zeal. Now, over the years, the name New Zealand dollar was formalized, but it's still called the Kiwi and the Fern quite commonly. Now, the Kiwi was pegged to the dollar and the pound, and it didn't trade freely until the 1980s. So this is really one of the last currencies that was allowed to trade freely in the market in modern times. The central bank for New Zealand is the RBNZ, or the Reserve Bank of New Zealand. Now, the RBNZ is actually very interesting. While being wholly owned by the government of New Zealand, it's actually completely independent in every single way. And we're going to go into that because it's one of the most interesting things about the Kiwi is the RBNZ. Now, the governor of the RBNZ is the single decision maker. Look, there's lots of committees, there's lots of advice given, but in the end, the governor says yes or no. There's no vote by members, people arguing. The governor is kind of like the authoritarian of the RBNZ. Now, they're going to meet 8 times a year to determine monetary policy, and they have one single mandate. It is price stability. Now, we are going to get into this price stability because the RBNZ did a revolutionary thing in the late 80s and early 90s. They were having a difficult time getting inflation under control. Inflation rates were between 10 and 15%. The economy was really growing. The population was growing. And they were just having a difficult time. They came up with the premise that the reason inflation remained high is that the public thought that inflation was going to remain high. And these are called inflation expectations. And inflation expectations really do provide central banks with good indication of what inflation is going to be in the future. So when you ask business owners and residents, what do you think inflation is going to be? If they say that inflation is going to be much higher in the future, what that means is that they're going to go out and make purchases now because they believe that things are going to be higher in the future. Ironically, what that does is that creates more inflation today because it creates more demand. And if you believe that inflation is going to be lower in a year from now, you may hold off on buying something until the prices come down, therefore creating less demand today. What the RBNZ decided is, okay, let's target inflation. Let's tell everybody here that we are going to keep inflation at 2 to 3%, period. We're going to throw the book at it. Whatever happens, we're going to do it. And all of a sudden, what happens is the people start to believe, inflation is going to be 2% for the rest of our lives. If you can get the public to buy into that and to believe the central bank, then all of a sudden you've done a lot of the difficult work that a central bank has to do. And so the whole inflation targeting model is based on these 4 pillars. Total independence. So the RBNZ has total independence from the government. Now, yes, the governor can be fired. That's about it. The governor is the sole decision maker. And so there's huge transparency in New Zealand. So everything is published. Everything the governor's thinking is published. Everything is published because what they want is they want the people and businesses of New Zealand to fully believe in what the governor says they're going to do. So transparency is very big. And as we talked about, there's a single objective, inflation targeting, and the governor controls it all. This has successfully brought inflation in New Zealand down, and it's actually a very revolutionary model that a lot of other countries have actually adopted into their central banking. Let's go over the economic reports that you're going to get when you're looking to trade the Kiwi. We've got quarterly GDP reports, monthly employment reports, we've got the PPI and the CPI, retail sales. Again, these are all very basic. Pretty much every single country has these reports. But then we want to talk about the ANZ Commodity Price Index. This is a monthly report, and this is really a kind of a big deal for the Kiwi because they do export a lot of agricultural commodity products. And so commodity prices are going to have a pretty big effect on the New Zealand economy. The New Zealand economy has lots of correlations that we need to talk about. Now, the first one we need to talk about is the correlation with the Australian dollar. The New Zealand dollar has an 80 to 90% positive correlation with the Australian dollar, which means if the Australian dollar goes up, the Kiwi goes up. If it goes down, it goes down. These are very highly correlated against each other. Let's take a look at this correlation. Here we have the Kiwi dollar. Now, I'm just going to add in the Aussie dollar. So if we're looking at the Kiwi dollar against the Aussie dollar, the dollar is going to pretty much cancel itself out. So this means we're really taking a look at the Australian dollar against the New Zealand dollar. Now, the candlestick chart is the Kiwi and the line chart is the Aussie. Take a look at this correlation between the two. You can see when one goes up, the other goes up. When one comes down, the other comes down. They're very highly correlated. If we go back in time, you can see that the Aussie dollar and Kiwi pretty much follow the same path. This is why we say they're 80 to 90% positively correlated. So just know that when you're trading the Kiwi, you're also trading the Aussie, and vice versa. They're very, very highly correlated pairs. Since the Kiwi is so highly correlated to the Aussie, it's also going to be correlated to all the things that the Aussie is correlated with. In our Australian dollar video, we go through all of the high correlations the Aussie has to the S&P 500. So again, when the S&P 500 is going up, the Aussie goes up, which means the Kiwi goes up. As you can see, there's strings pulling everything along. The Aussie dollar is also very highly correlated to iron ore and gold, and to China. So all of these things mean that, again, if the Kiwi is correlated to the Aussie, and just remember, things have all these strings tied between them with these correlations. If the Kiwi is highly correlated with the Aussie, and the Aussie is highly correlated with China, it means that the Kiwi is highly correlated with China. It's highly correlated with the SPX. It's highly correlated with iron ore. All these strings pull everything along. Now let's talk about the times when the Aussie and Kiwi aren't highly correlated. This can be one of our favorite trades out there because when they become uncorrelated, it usually has a big move with it. Let's take a look at it. We know that the Kiwi and the Aussie are highly correlated, but let's take a look at some times when they are not correlated. So I'm noticing this time right here in July and August. Let's focus in on that and just see how this trade could have worked. So as the Aussie continued to go higher, the Kiwi started to work its way lower. Now take a look at these percentages here. This here is 3.15%, and this is negative 0.65. This is over about a month of time. So this is about a 3.7% difference between these two currencies. That's a huge move. That's a really great trade. We always talk about when we see these correlations break down, they can be really good opportunities for traders to jump on and grab some pips. The most commonly traded pairs with the Kiwi is Kiwi dollar and Kiwi yen. These are going to have a lot of the volume. Other pairs you could take a look at is Euro Kiwi, has some decent volume, and Aussie Kiwi. Let me give a little bit of a warning here when it comes to the Kiwi. While yes, the Kiwi is the 10th most traded currency in the world, it is far smaller than a lot of the other ones. Now, whenever we talk about volume, we talk about liquidity. Now, liquidity is simply how many people are out there trading it. If you go to an auction somewhere and there's millions of people bidding on things, it's going to be a very competitive bid. It's going to be a very competitive bidding process with lots of participants. And so you're going to get very close to the true market price. But if you go to another auction across the street and there's 4 people there, all of a sudden there isn't an active bidding war against these things. And the price that the item goes for, it may not be close to the actual market price. And that's what we talk about when we talk about liquidity. Liquidity means that things can actually get mispriced a little bit easier on lower liquidity than higher liquidity. And so when you're trading the Kiwi, you need to understand that there are going to be periods of time where you get these aberrations. And that can cause some real havoc with your stop orders. That can cause some real havoc with some of your setups. So we like trading the Kiwi during times of high volume and not trading the Kiwi in times of low volume. We cover all of this in our Currency 101 session, so you can go check it out there. Let's narrow in on exactly how to trade the Kiwi. These are the times you want to be looking to be long Kiwi, when there's a risk-on move. So we have a rising S&P, and we know that the Aussie dollar is highly correlated to a rising S&P, so then we know that the Kiwi is highly correlated to a rising equity market. Now, we want to be long Kiwi, and we want to be long Kiwi against things like the dollar, the yen, and the Swiss franc, which are risk-off currencies. Those are currencies of safety. So typically, those are going to be really good times to be long Kiwi. Because of the correlations with the Aussie, then rising iron ore, gold prices, China demand, all of this is really good for the Kiwi. Remember, the Kiwi does a good amount of business in Asia with exporters. And when they're exporting more products, their economy is doing better, which means their currency should be stronger. And then we do want to take a look at when the Aussie and the Kiwi become uncorrelated. This is a really good trade when it happens. It probably happens about 2 or 3 times a year, but it can be a really great trading opportunity when these two things become uncorrelated. So whenever we see Australia having some issues and we have New Zealand not, then I think that's a good time to take a look at that pair. Times to be short the Kiwi. It's going to be just the opposite. We know that when the S&P 500 falls, when equities fall, we know that the Aussie falls, and that's going to pull the Kiwi along with it. So we want to be short Kiwi, and we want to be long currencies of safety, dollar, yen, Swiss franc. We also want to be short Kiwi when we're seeing the iron ore and gold prices and Chinese demand. That's when we want to be short Kiwi as well. Any time of geopolitical stress or economic stress in the world, something like COVID, something like a war, all of that stuff is very negative to the Kiwi because it is considered a growth currency and considered, hey, this is where you want to be when things are going great. It is not where you want to be when things are a little bit shaky. People go run and hide in things like the dollar and the yen and the Swiss franc. Whenever there's any time of economic or geopolitical stress in the world, you do not want to be long the Kiwi. And then, just in the opposite, when you see that Aussie and Australian growth are significantly higher than New Zealand, it makes a really good trade. I remember a time during COVID where Australia was starting to have a real problem with their numbers of the COVID virus. And they were doing really tight shutdowns and really clamping down on what people could do, which caused a contraction in economic growth. New Zealand, on the other hand, pretty much had no cases of COVID. Now look, they were no longer letting anyone into their country. Pretty much the borders were closed. But inside of New Zealand, things were pretty much back to normal because they didn't have any COVID. So during that period of time, New Zealand had much better economic growth, and we saw the Kiwi outperform the Aussie quite significantly during that period of time. Remember, the Aussie and Kiwi are 80 to 90% correlated, so this isn't a trade that's going to happen often, but when it does, you can be there to pounce on it. Well, hopefully that helped you learn a little bit more on how to trade the Kiwi. Thank you so much for joining us. This is Rob at Maverick Currencies. Goodbye, everybody.